Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be taking you through the concept, the uses, the properties of a very interesting indicator. The name is Volatility Quality Index. And as per the name, this indicator tries to measure or tries to gauge the nature of the quality of the volatility, whether there is I am not sure if there is such thing as a good quality volatility and bad quality volatility, but it is always a relative concept. So you have to consider a good volatility, which is going to help you make money, and it's have to be said to be a bad volatility situation if it is making you lose money. So that's as simple as that. So this indicator tries to help you in figuring out the quality of the volatility, which is likely to help you get more out of the market rather than losing to the market. So that's the concept, that's the use of this indicator, the volatility quality indicator. So let's now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. Here is the chart for the Dow Jones Industrial Average drawn on the hourly time frame. And on the lower side, you can see the volatility quality index plotted with the default calculation period. MA short moving average is 9 and the volatility quality index long moving average is of 200, and the actual VQI value is simply derived using the true range. We get this true range, and also some other parameters have to be added. Then we sum it up to arrive at the actual actual VQI. Then we take the VQI's average values for 9 candle periods as well as for the 200 candle periods. So both these values are then used to plot these graph where the readings are fairly simple. We consider the VQI to be on the rise. If on net these VQI reading, the sum of the VQI for last whatever is your calculation period is adding up. Generally we do it over last five. Suppose if in the last five candle periods, if the volatility has increased, then we generally see the VQI rising. If in the last five candle periods the VQI goes down, that simply means the volatility has been quite less. So both these conditions then are averaged out to get more stable versions of these output values. Of course, a single sharp jump is also going to cause an impact on the output value, and that is also evident from it. But at least to some extent, it tries to smoothen this situation. And if we look at the crossover of these two parameters here, if we consider the VQI as 9 moving average and VQI as 200 moving average, this can also be taken as a signaling mechanism. Suppose if the volatility is on the rise, and then as and when we get the 9 VQI crossing above the 200 VQI, then that can be considered to be the indicative of the fresh initiation of the volatility, as it happened in today's session also. After this jump on the higher side, we have the VQI crossing from the lower side to the upper side. Whereas if we look at the actual VQI output over last couple of hours, it has been on the rise. So both these factors can be kept in mind. So whenever we have these all the factors in congruence, we will have higher probability of making money. So that is the way you can measure the good quality volatility and bad quality volatility, and that is quite helpful when we have to determine whether to take the trade or whether to simply sit on the sidelines and allow things to consolidate, and maybe after due consolidation we can think about getting involved for the new trade. So whenever we will have the volatility picking up, this indicator will be generating signals. But for the signals to be reliable, we will have to look at its concept and how we can take the advantage of this indicator. So the first thing to do is look at its absolute values for you to have a better chance of getting the things right. the VQI output needs to be on the rise. That simply means the VQI, that is the volatility quality index, is going up. That simply means the volatility is on the rise. Then comes the question of using the crossover. So whenever the shorter time frame crossover, the shorter time frame moving average will cross above the larger time frame moving average of the VQI, that will mean that in near term the volatility has jumped markedly higher compared to what it has been over last 200 candle periods. And in recent times the higher volatility means we will have the larger moves happening at least for next couple of hours. That possibility is going to be there. So this indicator then helps you in figuring out those kind of opportunities. So you have to pay attention to both these moving averages of the VQI. As along with that, you also have to pay attention to the actual VQI output as well. Suppose if we change the chart and go to the most used currency instrument, Euro USD, then you can notice that for last almost a day, if we go back in time to yesterday's trading session, the VQI has been on the rise. So in that sense, its volatility has been on the rise. But sometimes the volatility in the lower time frame dropped, then it picked up again. And I think those kind of opportunities might have got you more profitable terms compared to if you were not really going to take into consideration all these variations, and if you were simply to take into account the rise in VQI. Suppose if you were to take a trade here, then from those levels there was this correction. But if you were to simply take the trade as and when the crossover is happening along with this rise in VQI, so in that kind of situation you would have got the entry somewhere here around 9 GMT. Prior entry would have been somewhere here. So you would have been in position to optimize the entry compared to simply going with this rise in VQI. And as the VQI started to dip, you can also start avoiding the fresh crossovers. You can simply omit those crossovers whenever the VQI is in decline. So that way you can better optimize your trades. And if things seem to be going sideways, if there is not much of an momentum in the underlying instrument, in that kind of scenario it is better to sit on the sidelines rather than burning money in a situation where the underlying instrument doesn't really move very much. It simply stays where it has, and it simply costs you commission and brokerage costs. So to avoid that, you can rely on these VQI to help you figure out the opportunities where to get involved and where to sit on the sidelines. So that's how these things work up. Okay. Now let us consider the editing options and other parameters which we can pick to customize this indicator in ways we feel is likely to bring more profit. So you can vary this short MA period of the VQI and the long MA period of the VQI. Suppose if you want to reduce this gap, which is quite large, this is the default setup as per its developer. But suppose if you feel that this gap is too much, and you can figure out a better combination, something like on in the ratio of 50 to 100, you can define it that way as well. In that case, your VQI moving average chart would have looked like this, and the crossovers are not happening that frequently here in this case, because the 9 VQI would have responded to almost any sudden spurt in the price action. But for 50 VQI, it will take significant amount of price action data to make changes in its core trajectory, and that is also reflected in this plotting of the VQI 50 and 100 combination. Here also the underlying concept is going to be the same. You simply have to pay attention to the VQI value. It should be on the rise, and then along with that you will need the VQI's crossover, moving average crossover. It should be all on the same side. In that situation you will have higher probability of making money than losing money. So again, I am going to go back to this combination, and suppose if you want to go with the combination of the lower time frame for both short and long, you can do that as well. So this is how this VQI with a combination of 10 and 20 is going to look like. So this is now totally dependent, totally relied upon the price action data of the shorter time frame, shorter time horizon. Okay, now I'm going to restore it back to 200 again, and this to 9. Then comes the color combination of the output values. If you feel that this color combination is good enough, all it needs to a bit of styling, then you can go for various customization options. You can go for different set of combinations. The weight can be increased or decreased, and to make it look less cluttered. Any of these combinations, transparency can be reduced. So now the values are there. These are fairly usable, and to retrieve the individual output value at any point in time, you can simply take the cursor and check out the values. But if you want to make sure that the clutteredness of the chart is reduced, if the chart you want to look clean in that sense, you can reduce this transparency of the output value and it will work just fine. Then comes the output color combination and then levels. This is a unbounded indicator. There is no fixed combination of the output value which you can define as a level, so it is a very difficult task. Coming to the advanced editing options, suppose if you want to keep this output value of the indicator constant throughout the current candle period, then you will need to opt for this recalculate on new candle only, else you will have to keep working with a output value which is going to keep varying as per the changes in the current applied price. So you have to define this, and accordingly this value will keep fluctuating. Highlight the time period zone, whatever is your calculation time frame, it will be highlighted if you take this option. As you can notice, calculate from the custom data. The instrument can be further customized. The indicator can be further customized. You can use this indicator for almost all of the instruments supported on the platform. Suppose, for example, you want to use it for figuring out the quality of the volatility in the crude oil. You can use that as well. And here you would have gotten this crossover on the lower side, and after that it has gone into the decline. So here, whenever the volatility is on the rise, you will have this crossover of lower time frame VQI from for and lower time frame VQI will cross above the higher time frame VQI. And to make a directional basis, you will need to use the price action data or any other indicator. This indicator is not really going to give you much of an idea regarding the trajectory of the underlying instrument. This indicator is purely the function of the volatility. So for any opportunities where you feel there is a higher probability of making money on any particular side, you will have to use a directional basis separately. Okay. Coming to the customization of these indicator, you can also vary the candle period. You can use it from the chart. So whatever is your chart's candle period, it will be utilized. Else you will have this option of defining these indicators candle period according to your requirement. Now I have used hourly candle period for the calculation of these indicators. Suppose if I change the chart's candle period to say 4 hourly, even in that scenario we will have the calculation of the indicator as per 1 hourly time frame only. So this is something which we have to keep in mind. Now I will restore it back to use from the chart side. As per bit, there will be minor difference between the output value depending on the side of the spread. If you want the indicator to be available on all the candle periods, then you have to opt in for this option, as you have to define on which time frame this indicator should be available, and only on those time frames this indicator will be available. Now that I have opted for 4 hourly and 5 minutes, only on those candle periods we will have the VQI plotted, but for other time frames there won't be any plotting of the VQI. So you get this customization tool as well. Now I am going to restore it to show indicator on all the periods. Base period. Let's see if there is going to be any change when I change the base period. Yes, for this indicator, the base period is going to play an important role. So you will have to define on which time frame you want to use this indicator, and accordingly you will have to define the base period, and we will have this plotting of the indicator done. So now I am going to restore it back to hourly and change the chart to hourly as well. Okay. So guys, that's all from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been included in the bio. So give it a try and let me know how it works out for you. So that's all from my side for today's session. I will be back tomorrow with a new indicator, new formation, new combination. So do come back. See you tomorrow. Goodbye.